Do you flip 10 houses or do you keep 10 houses? What's better for you? What's better in the circumstance? Which one's going to make you more money? Before we jump into specifics in today's market, let's go over some fundamentals and let's ask some legitimate questions about real estate investing to begin with, especially in regards to flipping or keeping. So which one is better? Okay, so let's create a scenario here. Do you flip 10 houses or do you keep 10 houses? What's better for you? What's better in the circumstance? Which one's going to make you more money? Ready, go. Don't know? Maybe you do? Flipping, yeah, keeping, maybe. But what about maybe possibly thinking about 1 year from now? Which one's better in the next 12 months? Do you make more money flipping 10 houses or keeping 10 houses in 12 months? What about 5 years? What about 10 years? Think about that. Are you still making money on the houses you flipped 10 years from now? Are you still making money on the houses you flipped this year, 10 years from now? Probably not. Are you making money on the houses that you kept 10 years from now? Probably, hopefully, if you did it right. So go through that a little bit. Let's create two scenarios here. This first scenario in a situation where you flip 10 houses. So you make 30 grand on each house. Whoop, whoop. That's what you're aiming to do. Let's say you're doing a 15% cash on cash, whatever. It doesn't really matter. Let's say that you flip 10 successfully. They average $30,000 per flip. That's $300,000 over the course of 12 months. Congratulations, before taxes. Now, taxes on flips, I'm not a tax professional. I'm not a CPA, but I definitely have paid enough CPAs and tax professionals and attorneys to be able to act like one a little bit. But from my personal experience, flipping houses, whether it's in one of my entities or not, is still going to be taxed as active income or taxed as ordinary income. So that said, though, if I'm going to be taxed in that situation, then whether it's an S Corp, LLC, doesn't really matter. I'm going to be somewhere between, 20 to 35+% tax bracket, give or take, maybe 40%, depending on how much you make. It's totally dependent on your business. But let's just say for average purposes, it's 33%. You could pay a little bit less, could pay a little bit more. You net $201,000 after taxes. You also have lots of yelling at contractors over that time period, and you never make money on those houses again. But still, you make 200 to 300 grand. Fantastic, congratulations. But let's say that you bought 10 houses and you kept all 10. Let's say you get $350 per month after all expenses, net NOI, net operating income, $3,500 a month over the course of a year, because 10 houses, 350 times 10 is $3,500. That's going to be $42,000 in positive cash flow. Whoop, whoop. Now, should you be making that on today's interest rates? Maybe. Are those, you're going to be like, where do I get those? That's a good question. That's part of watching lots of videos and talking to acquisition guys. But can you still net that? Absolutely, depending on what market you're in. Now, you're taxed at a passive income bracket. Then that's going to be between 15 and 25%. Not a professional, but it just depends on where you're at. But let's just say that's what it is. You also get tax depreciation because you get to deduct. You get to depreciate the assets on the actual properties themselves. Depreciation is flexible, depending on a couple situations, on your cost basis and all that great stuff. But I threw a random number in there as well. If the houses were worth $200,000. That said, you get 1 year, you get over long-term tax savings, because if you keep the properties over a year, you switch over to long-term capital gains if you ever sell it. Sorry, you get long-term capital gains instead of short-term. Forgive me for messing that up on you guys. So you have a little bit lower taxes, but still, at the end of the day, you're not making that much more than flips. So what about leverage? What about better financing? There are some scenarios that happen there when you keep properties versus flipping them. When you flip a house, last money you ever make on a house, but you can make a lot. Trust me, I know. When you keep a house, you might make smaller dollar amounts in the beginning, but over time, you might make more. So let's average these things out. So let's say that you look at that blue line there is basically you flipping 10 houses every single year. So you flip 10 houses every year, okay? That means that every year you're making $300,000 per year before taxes. Keep that in mind. So that's a flat line of income, $300,000, and so forth, but maybe you're keeping some of it, maybe you're saving some of it, maybe you're not. Speaking from experience and knowing a lot of house flippers out there, if you're making 300 grand a year, I promise you most of those guys are spending 200 to 250,000 a year, because most people do. Usually the higher income you make per year, the more you end up spending as well. It's kind of one of those things that just seems to happen for some reason. Now, maybe you're highly due diligent and you sit there and you save that money and reinvest it, but most people don't. Spoiler alert, don't be that person. On the red line there, that is you keeping 10 houses every year instead and making $42,000 each house. So each year it increases. But guess what? This is cash flow. You're not selling any of these houses. So you keep these houses every single year and you'll see that your income goes up. Now it takes about year 7, year 8, give or take, for your passive income to meet what you've been making annually for 7 to 8 years on flipping houses. So it might not seem like it's a lot, it might seem like that's a long time, and it is. It can be, depending on where you're at in your business and your career. But that's passive income. That's money now coming in. That's money that is coming in. And if you do it again every single year after that, you now have $400,000, $500,000, and so forth. And that's not assuming any kind of appreciation. That's not assuming any rent increases or any of that aspect whatsoever. That's also not assuming any kind of repairs or mess ups on the property too. So this is just kind of a good little basis to realize that, hey, yes, flipping houses in the beginning is definitely going to make you a lot more money than keeping them. But over time, your future self thanks you the more houses that you keep, because you also have things like appreciation. There's houses that I kept in 2015 and 16 that I still own today, 8-9 years later, that I'm very, very happy that I own. There's also tax benefits. You start actually being able to realize that you can depreciate these things a bit. You can also later do cash out refis and be able to pull out income tax-free as long as the debt pays for it. That's called leveraging. You build wealth, so you build passive income. You get better financing. The more properties you have in your portfolio, the more attractive you are to a bank. By the more attractive you are to a bank, which means that you get better financing, you have better assets, you have better leverage experience, you also have the ability to pledge those things to be able to sit there and buy more properties and so forth, on and on. There's a lot of flexibility the more properties you keep. However, there's a trick to all this, and there's also a kind of a thing. How do you keep 10 properties a year if you don't have the money to keep 10 properties a year? Sometimes you have to flip houses that have extra income to then keep houses as well, depending on where you are in your financial career. That was more me. I didn't have money early on in my career to be able to sit there and keep 10 houses a year. There was zero chance I could have done that. I didn't have the financial education. I didn't have the financial backing. I didn't have the way for my tax returns or any of that kind of stuff to qualify for that many houses to begin with. I also didn't have the capital to be able to do it. So I needed to do things like active income things, like wholesaling properties, sitting out there and going out there and flipping them, partnering with people, JVs and so forth, to build up my reserves, to build up my active income, to be able to start buying and keeping properties.